Hello guys, welcome to Olive's Academy. In this video, we are going to see the second part of the same question, that WAT question, Timira traders. And in this question, we are going to see how to make the statement of financial position as for the year ended 31st March 2022. They have asked here to prepare the financial statement or statement of financial position as at 31st March 2022. Right, let's go into it now. So guys already, so I have given in the right side of the screen that the format of statement of financial position. First of all, we have to put the name of the company, that is Timira Traders, and you have to put what you are preparing, that is the statement name, that is statement of financial position, and you have to put for which period that you are preparing, that is for the year ended 31st March 2022. So you know that this is a normal general format of statement of financial position, which will include the non-current asset and current assets, and we add all assets like non-current asset plus current assets, and we get the total assets. And the next part of that is equity and liability, and under that the first part is the equity. So after getting the total of the equity, then you go to non-current liabilities and current liabilities, and after getting the total of non-current liabilities and current liabilities, you add total equity plus non-current liability plus current liability and get the total equity and liabilities. This total asset and this total equity and liability should be the same value. That is very important. If that is not the same value, then your answer is wrong, or your financial state position is wrong. Somewhere you have made a mistake. So let us see how to do this. Right, in this question, first of all, that when you want to mention the non-current assets. What are the non-current assets we have? You can see here: machinery, furniture and fittings, plus, okay, we'll write first machinery, furniture and fittings, plus, is there any other things? Yes, there is one more thing, that is the lorry. They are telling that on 1st April 2021 a lorry owned by Timira was transferred. That means he is having the lorry for his personal use. Now he is transferring that lorry from his personal usage to to the business. So when he transfers that, you have to mention the value of the lorry, or you have to include that fixed asset or non-current asset to your statement of financial position, that means in your books of accounts. So let us include that also here. So motor lorry. Right, now we'll see the cost. What is the cost of machinery? That is 2000. Very simple. Do it very simple. Okay, don't complicate yourself. Just mention the amount 2000. Then furniture and fittings 800. Now motor lorry. How much is the value of the motor lorry? That is 1 million. That means 1000. In thousands, it's 1000. Now let's see the accumulated depreciation. Already there is an accumulated depreciation for machinery, that is 400. Then furniture and fittings, that is 320. This balance is as of 31st March 2022. Okay, then what is the motor lorry depreciation? So you can see that in our previous profit and loss statement, statement of comprehensive income, we calculated the depreciation of motor vehicle, because that is purchased on 1st April 2021, that is the opening day of the financial year. So the depreciation has to be calculated for only 1 year, that is 250. So we calculated already, so include this 250. So since the accumulated depreciation is there here, accumulated depreciation, they are telling that as at 1st April 2021, that means this is the opening balance of the accumulated depreciation account. Then what about for the current year? This is the opening balance, right? So that means last year's closing balance. For that, we have already calculated the depreciation under statement of comprehensive income. The depreciation of machinery is 200, right? So we put it as 200. So add 200 to this machinery. 400 plus 200. Now furniture and fittings. Furniture and fittings we calculated as 160. So 320 is accumulated opening balance of the accumulated depreciation account plus 160. That means it's 480. So the total cost of it is 3,800. Then you take it for this. And what is the carrying value? Carrying value is cost minus accumulated depreciation. Cost minus accumulated depreciation. Cost minus accumulated depreciation. This is the carrying value of the non-current assets. That is 2,470. So this part is finished for us now. Right. Next, trade receivable. What is trade? What to do with the trade receivable? Right. Just take the trade receivable part. Trade receivable is a current account, current assets. So in this trade receivable, will you put only 20,200? Just think about it. No, you can't put 20,200 because there is a bad debt. So you have to minus the bad debt for that. Okay. So the bad debt we have calculated is 200,000. So 20,200 minus 200. That is bad debt. So 20,000 is the net trade receivable. Right. So the other one is trade receivable is finished. Trade payable, no. Then cash in hand, yes. You add the cash in hand here. Cash in hand is 95. Right. So cash in hand is also finished. Now inventory. This is the opening inventory. You have to see how to add this one, the opening inventory. How can you add that? Right, which one to put as an inventory? I'm going to put this one, 13,950. Yes, we'll put that, right? No, you can't put this one because this is an opening inventory. In the statement of financial position, we are showing how much we are left with as on 31st March 2022. So how much we are left with? Go to the additional information and find the closing inventory. You have to add the closing inventory. The closing inventory is 8,250. So inventory is 8,250. What else to add? That is added already. Then after the inventory, is it tallying now? I mean, is it correct? So what else do you think that you have to add? What are the assets have? Yeah, what are the assets that we have? We have rent prepayment. How much was the rent prepayment? The rent prepayment is this amount. 200,000 and was paid for the month of April and May. So we paid 200,000 for April and 200,000 for May. So prepayment is 400. So the total of that is 28,745. So the total asset would be 2,470 plus 28,745, that is 31,215. The other part is the equity and liabilities. The equity part, first of all, you have to see what is available under equity. Any capital or something. Yes, there is a capital, opening capital. 1st April 2021 is the opening capital. Opening capital. Opening capital is 7,625. 7,625. Then what else you have? Is there any additional capital invested? Yes, there is an additional capital invested. How can we find that? Yes, Timura transferred his own lorry to the business. That is a capital. So additional capital in terms of lorry. How much? That was 1 million. So we put it as 1,000. Then what else to add to the equity? Nothing else. Only the profit. How much is the profit? That is 10,955. 10,955. Then if you add that all, then you get a total of 19,580. Then after that, you come to the non-current liability. What is the non-current liability? Have we completed all these things? So what is the non-current liability we have? We have trade payables. Sorry, non-current liabilities. Non-current liabilities mean it is more than 1 year. There is financial commitment that is more than 1 year. So we have to make this payment over 1 year. So what are the trade payables? Is current liability. What is the non-current liability? That is bank loan. Bank loan is a non-current liability. That is 7,500. Then current liabilities. Under the current liabilities, we can see we have trade payables. Trade payables. How much is the trade payable? 3,000. Actually, we have to put all this here. Okay. Okay. So trade payables is 3,000, and bank. What else we have? Trade payables and bank overdraft. We have bank overdraft. How much is the bank overdraft here? Bank overdraft. Bank overdraft is 1,050. Then what else we have? We have one more liability, that is accrued electricity. This is accrued electricity. We have already what we have done already for electricity. We have already added to the current part, the current year. So that is accrued. That is added but not paid. So added to the expenses but not paid. So we have to add the accrued electricity. That is 85. So total of that becomes 4,135, and the total equity and liabilities are 19,580 plus 1,500 plus accrued electricity. This current liabilities is 31,215. So you can see here now, this is